The content of this video is for informational purposes only and does not constitute financial or investment advice. In its earliest days, Bitcoin was championed by a passionate group of supporters who believed in financial freedom and imagined a world where you could opt out of the dominant fiat-based global financial system. Fast forward to today, and we have rumors of Donald Trump considering Bitcoin as a strategic reserve asset, alongside assets such as gold and oil. Imagine the impact if Trump were to make this declaration. It would signal a monumental shift in U.S. economic policy, legitimize Bitcoin globally, and accelerate adoption among the world's most powerful players. Countries like China and Russia have shown interest in cryptocurrency, and the U.S. adopting Bitcoin could influence other nations to follow suit. This could lead to a new era of financial competition, where countries vie to accumulate Bitcoin, similar to how they stockpile gold and other valuable commodities. Welcome to our channel, where we will navigate the world of Bitcoin and its potential to reshape global financial systems. In this video, we will explore how we got here and what this could mean for the future of Bitcoin, and why you really ought to be paying attention to this unique and emerging global asset. Taking the promise of Bitcoin to its logical conclusion, it's no surprise to see it emerging as a unique asset. Bitcoin possesses the characteristics of a currency, a store of value, and a commodity. Its resilience and the powerful network effects it enjoys have led many investors, financial planners, and even politicians to conclude that a balanced portfolio should include an allocation to Bitcoin. With Trump transitioning from a Bitcoin skeptic to an advocate, along with the support of pro-Bitcoin figures within his personal and political circle, the growing role of Bitcoin for financial, economic, and political use cases is not all that surprising. If Bitcoin does indeed emerge as a strategic reserve asset, it would signify a major shift in its perception, aligning it with traditional reserve assets like gold and oil. This would accelerate global game theory, compelling other nation-states, corporations, and high-net-worth individuals to take a much closer look at owning Bitcoin. Allocating Bitcoin as a strategic reserve asset would certainly solidify Bitcoin's place in the global financial system, significantly boosting its value and further legitimizing it as a serious asset class. One of the major catalysts for the adoption of Bitcoin by nation-states and corporate treasuries is the growing concern over money printing, the expansion of global liquidity, and the inevitable debasement of fiat currencies. Central banks around the world have been printing money at unprecedented rates to address economic crises, leading to concerns about inflation and the devaluation of fiat currencies. Bitcoin, with its fixed supply and predictable issuance schedule, offers a hedge against these risks. Its scarcity makes it a more reliable store of value compared to fiat currencies, which can be printed at will. The recent global IT outages caused by CrowdStrike's software update have put a spotlight on Bitcoin's unique advantages. While traditional financial systems, including stock exchanges, payment processors, and even government services, were severely disrupted, Bitcoin continued to operate without disruption, as it has since Bitcoin's first Genesis block was mined back in January 2009. This disruption-free resilience in the face of global uncertainty really highlights the unique attributes of Bitcoin's decentralized nature, which shields it from the vulnerabilities affecting centralized systems. Bitcoin's decentralization is its superpower. It operates on a peer-to-peer network spread across the globe, making it essentially impossible for any single entity, be it a country or corporation, to censor or manipulate the Bitcoin network or confiscate Bitcoin from anyone that holds their own private key. In contrast, traditional assets like fiat currencies, stocks, and bonds can be heavily regulated and influenced by government policies. Bitcoin's decentralized structure means that even if one country imposes restrictions, the network as a whole continues to function smoothly. Bitcoin's behavior diverges significantly from traditional assets like stocks and bonds. While these assets are often influenced by economic cycles and market trends, Bitcoin has emerged as a distinct asset class, untethered by geopolitical events or government control. Even BlackRock's Larry Fink has acknowledged Bitcoin's legitimacy, suggesting it deserves consideration in a diversified portfolio. No doubt the wildly successful ETFs in the United States have accelerated the emergence of Bitcoin as a bona fide new asset class. The uncorrelated nature of Bitcoin to other investment assets presents an appealing hedge against economic uncertainties and inflation, especially as central banks continue to engage in aggressive monetary policies. Several forward-thinking corporations have already recognized Bitcoin's potential as a treasury reserve asset. MicroStrategy, for example, has been a pioneer in this space, holding significant amounts of Bitcoin in its treasury. This strategy has paid off, with MicroStrategy's stock price surging as a result of its Bitcoin holdings. Similarly, companies like Metaplanet in Asia and Semlar Medical in the US are following suit, incorporating Bitcoin into their treasury strategies. This growing trend among corporations underscores Bitcoin's increasing acceptance and potential as a valuable reserve asset for corporations, and now, as we will see, for nation-states as well. The case of El Salvador is particularly noteworthy. El Salvador's bold move to adopt Bitcoin as legal tender and its strategy to accumulate Bitcoin contrasts sharply with Germany's decision to sell its confiscated Bitcoin holdings. Germany's premature sale was followed by a significant price spike, underscoring a missed opportunity and a complete misreading of the future of this digital asset. In contrast, El Salvador's approach demonstrates a forward-thinking strategy, embracing Bitcoin's potential as a reserve asset, and a strategy that has already paid off significantly for this small but up-and-coming Latin American country. The country even mines Bitcoin using geothermal energy from volcanoes. Other countries are also exploring Bitcoin's potential. Argentina is considering its use as a reserve asset, and rumors suggest interest from some oil-rich Middle Eastern nations as well. The recent speculation about Trump's stance further suggests that he is surrounding himself with forward-thinking advisors and illustrates Bitcoin's growing presence on the global stage. Beyond its technological advantages, Bitcoin is also seen as a hard asset. Unlike gold, which can be mined as prices rise, Bitcoin's supply is capped at 21 million. That's it. There can never be more, and its issuance is strictly regulated by software run on thousands of machines in a decentralized manner across the globe. This scarcity makes Bitcoin an attractive hedge against inflation and fiat currency debasement, particularly as global money supply expands. As global money supply increases and fiat currencies face inevitable debasement, Bitcoin's fixed supply offers a safeguard against these economic pressures. Its role as a hard asset, beyond the reach of traditional financial systems, positions it uniquely in the investment landscape as the world's apex asset. Bitcoin's potential as a global reserve asset is more than a theoretical concept. It's a burgeoning reality driven by its unique attributes and growing adoption. Stay tuned as we continue to explore Bitcoin's evolving role in the global economy. In conclusion, the potential for Bitcoin to become a global reserve asset is not just a speculative idea, but a real possibility that could reshape the financial landscape. Its decentralized nature, resilience, and lack of correlation to traditional assets make it a compelling hedge against the fiat-dominated current world order. As Bitcoin continues to gain traction on Wall Street and among high-net-worth individuals, corporations, and nation-states, it could transform the future of financial reserves and lead to more forward-thinking investment strategies that acknowledge the growing role of Bitcoin in a diversified portfolio. Moving forward, the ongoing concerns around money printing, global liquidity, and fiat debasement will only strengthen the case for Bitcoin as a strategic reserve asset. Whether Trump officially endorses this move or not, the momentum behind Bitcoin is undeniable, and the trajectory of Bitcoin dominance as the world's apex asset is becoming more evident. If you found this video insightful, please like, share, and subscribe for more content on the emerging role of Bitcoin.